Good morning. You're watching The Market right here on 80 now with me, Aisha Faridi, Pankaj Podar, Avan Dabash in the studios. And today, of course, is the big one, the RBI policy outcome. A 25 bips hike seems like it's well in the price. And for the market as well, we're really not doing bad. The fact that we managed to inch higher and we managed to gain for a fourth consecutive day in a row. In fact, we're almost 600 points up in the last 4 trading sessions alone. So it's not looking bad at all. You've got a nice 1% move coming in on the index, or rather both the indexes yesterday. We're now at that crucial level of 17,500, and it's clearly banks, Reliance Industries, which have all been leading the rally in the last 4 trading sessions. And clearly it's large caps to the fore, while mid caps are a bit off and underperformers, as compared to, of course, what the large caps had been. And I think the underlying trend, Pankaj, has been the fact that FIIs are back in the market. At least you're getting a buy figure. Of course, it's no more what it used to be.
No, but still 6 days of buy figure cannot be
6 days of a buy figure.
Without any
minuscule
block
at that, but a buy figure regardless.
Absolutely. I think, the trend would always change like that. But as you said, it's important to watch out for the trend and whether this 800, 900 crore becomes 1500, 1600 on a daily basis. And the good thing is that there will be no major blocks. So I think that is something which essentially also the street is, probably excited about that. Numbers are looking in decent, prices are going up, people are short in the market. So if this continues, it could probably, lead to further up move or led by short covering.
And I think the big trigger is going to be, of course, what the, governor's commentary is today. While a 25 bips hike seems well in the price, it's going to be, the commentary around what's happening with the globe at large, the volatility in crude prices. All of it is, I think, going to provide that near-term trigger to the markets.
Absolutely. That will be an important event. And more importantly, the event gets away.
Yeah.
So once the comment comes in, markets will digest that. A lot of Q4 numbers are coming in as we are speaking. Angel broking at the bottom of your screen. It's seen a rise of about 11.7% in March on a month-to-month basis. But this could also be because March has, 4-5 days extra versus Feb. So I think that number itself could be because of that. And the client base has risen by 3.3%. Again, it has, like a 4-5-6% more number of days. So I think that is important, but we look out for this. The stock from 1900 levels has crashed down to 1168. So once again, we'll try and get in touch with the management, try and find out about this rise, what is the quality of this rise, and what do they expect importantly for FY24 hour.
Yep, a lot of commentary on liquidity, growth, even the core inflation and food inflation, all of that. That is what we're going to watch out for when it comes to the Reserve Bank. But yes, as you said, a lot of those updates trickling in, and then that's not the only one. You have a whole host of other updates that the street is going to watch out for. For instance, Avenue Supermarts or D-Mart as well came out with their quarterly highlights. There's been a 20% revenue growth this time around. The average revenue per store is up 2.3% on a 3-year CAGR, and you have seen the average revenue per square foot though on a 3-year CAGR that has disappointed, down about 3%. But their overall revenue has grown by about 20%. You've got Nykaa as well that came out with their Q4 operational updates, and here's the highlight. They expect to maintain their 9-month growth rates. They have been aided in part by the Pink Love sale, that's what they've said. And fashion revenue, they said in Q4 will be in late teens. Do remember for Nykaa, there have been a slew of those exits. You also had the bonus news, which was seen as a huge setback for the stock. There are question marks as to whether or not we're going to see the fashion business actually pick up. So these comments are definitely going to be taken quite seriously by the street. They're talking about how the pull back in consumer spending as well affects fashion. And then there's Cholamandalam Finance.
Just wanted to say that this is the first time Nykaa has given a quarterly update. Yeah. So I think that it really came in as a surprise as to whatever data they had given. So the reports that I read in the morning clearly said for the first time, Nykaa has given a quarterly update where, things start, which we were just talking about.
When there's competition and such strong, there are many firsts.
Yeah, but more importantly, if they give updates, they'll now keep giving updates. So I think street will not be surprised the next time, but I think this time around there will be a reaction. because it came in as a surprise.
Yeah, you're right. And in the backdrop, we've also, by the way, seen the stock price that's been a heady mover yesterday. Incidentally, gained about 7%. And then watch out for Cholamandalam Finance as well. Came out with its updates where the Q4 disbursement growth on a provisional basis has been quite healthy, up 65%. And for FY23 as well, at 66,500 odd crores, has grown about 87%. Overall billing has been 130% in Q4, and they say they continue to hold a strong liquidity position. The total liquidity position is at about 6,750 crores, Aisha.
Yeah, TTK Healthcare, that's going to be the other stock which is going to be in focus this morning. The board is going to be meeting for delisting on April 20th, and they're going to consider delisting from the bourses. That's quite an intriguing move, huh, Pankaj?
Absolutely.
That also pretty much came as a surprise.
Yeah, I think delisting only now comes in as a surprise.
Yeah.
The last delisting I remember was Vedanta. Before that, Polaris. So, in 3-4 years, you just get one delisting, market cap of about 1,800 odd crores. But, whenever we track delisting, we need to track the shareholding. So that's the most important thing. We'll just change the first figure. Its public shareholding is 25%. Promoters have 74.6. So the public shareholding is this. They need to reach 90 odd percent. So that's the first number. Let's pull up the plate again. It'll give you a sense that institutional holding is not particularly very, very high. It's also a very retail dominated sort of a company. So Axis Mutual Funds own about 2.8, and if you add the other 3 MFs, so 4 MFs own close to about 2.9%, 11 FIs own about 2.3%. So, generally the tendency is that whatever they decide, the price that they decide should be the number, because, they are the large movers and they would probably be there. Now, just look at the second column now. Greater than 2 lakhs, which probably is the HNI category, 3.8%, 12 investors or 12 different entities own these names, and about close to about 15,000 names or slightly more than that own about 11.8%. There is also a fund which is categorized into body corporates. That's MCap India Fund, which owns about 2%. So it'll be interesting. They can get through probably, these funds that we just spoke about. What they essentially say will be important. But the first trigger is that 20th is the board meet. What floor price they give, what rationale they give will be the next trigger, which is on 20th of April.
Yeah, everyone's waiting to hear, I guess, as to why this move of delisting, and especially from a TTK Prestige. TTK Healthcare, I beg your pardon. Let's also hear it out then on crude prices. They've been the other chink in the armor, and the kind of volatility that you've seen off late. In fact, we spoke with Dr. Ferdun Fesharaki, the founder and chairman at FGE, and he's of the view that crude is actually going to touch $100 per barrel in the very near future.
OPEC must have thought that they are preventing something which may be happening in the next few months, and they wanted to preempt it by cutting the production early enough. So it took us all by surprise. And $100 easily achievable, and even more than that is possible. I think probability is 90% or more. So when you do the balances, it's obvious that second half of this year would be very hard to contain. So when would it reach there? It would be third and fourth quarter, and definitely by early 2024, and may go higher than $100 too. So $100, $95 to $105 is our assumption.
All right, that's the countdown to the RBI policy. As we said, it seems like a 25 basis points rate hike seems to be a given this time around. But let's focus in on the market texture. As we said yesterday, we did manage to gain quite a bit of traction. What started off as a lackluster day went on to end with quite a flourish above the 17,550 mark. Let's bring on board Nooresh Merani as well as Kunal Bothra, our chartists who joined in this morning. Kunal, let's get in your sense as to what the outlook is from an index level. Do you believe that we're likely to scale up from the 17,550 mark? And what's the expectation when it comes to banks in light of the policy?
Good morning, Avan. So, it's a very interesting set of data points, to look at. And, it's very perplexing, frankly, because over the last, 3 or 4 days, we've seen the Nifty and the Bank Nifty moving up, steadily higher, the Nifty scaling up some, 650, 700 points, the Bank Nifty moving up by more than 1,500 odd points from the 39,000, 39,500 levels. But the intriguing data point is that specifically over the last 2 or 3 trading sessions, we've seen a very sharp reduction in open interest. Now, I was flagging this off yesterday as well in the morning that the reduction in the Bank Nifty the day prior was almost 30% drop. Yesterday, the data indicates that there has been an additional 17% reduction in the open interest. We are almost at 91,000 contracts on the Bank Nifty futures, which is one of the lower OI, for the index, at least over the last many weeks. So this is a bit, indicative that either the index is going through a major round of short covering, but that is not getting replicated with the kind of an extensive up move in the Bank Nifty. Like for example, yesterday the Bank Nifty underperformed. So even after a 17% short covering, the Bank Nifty ideally should have gone to a strong outperformance. So this indicates that this is more of a long unwinding which is happening on the index future. So this indicates that it's always better to stay stock specific in this kind of an environment. Maybe the markets are trading in a bit light going into the RBI policy event, and post the RBI policies where I believe the index would probably find a lot more trading action. So as of now, would remain light on the Bank Nifty, and action is more stock specific given the kind of data in terms of the open interest for the indices.
Nooresh, hi, morning. In good stead, we are back at 17,500 and a big event as well today, the RBI policy. What's on the cards?
So now we are getting into a period where one has to be stock specific. The bounce back, the target for the bounce back was 17,600. Once we crossed 17,200 and initiated a buy at 17,000, and today we go closer to that 17,600 mark. So that's the time to book profits and wait for a dip to re-enter longs. At 17,600, the risk reward now shifts more towards a stock specific trade. 17,800 is a major resistance in the near term. Same is the case with Bank Nifty. At 41,000, 41,200, 400 remains a major resistance. So time to now go stock specific instead of the index. So overall positive on the broader markets as well as the stocks, but on the Nifty we could see a bit of a pause for the next few sessions.
Let's talk stocks then. Nooresh says that there could be a pause in the Nifty and we could consolidate at these current levels for a while. But Kunal, what are the stocks which are going to give us a fillip?
So there are fresh breakout stocks in the large cap names, so we'll concentrate there. Two buy calls. The first one is about L&T. We discussed the stock yesterday as well. Looks very attractive on the charts, given a breakout about the 2200, 2250 mark. So we would suggest a buy with 2275 as an immediate target. Stop loss could be trailed hard to 2225. And the second would be Bajaj Auto, more of a continuation buy, expecting the stock to scale up higher from yesterday's closing of almost 4,000. 4,100 could be a renewed target for Bajaj Auto, and stop loss is trailed hard to 3950.
All right, Nooresh, let's find out those individual stock strategies. What is it that you're looking at closely on the charts?
So going into midcaps, first is a buy on Indian hotels. The stock is on verge of a breakout about 330. Good enough consolidation done in the near term. After that huge move in 2021, the stock did not fall in the current correction. That's the first indication of relative outperformance. So out here, preempting that move about 330. Target price would be 360, a stop loss at 310. That makes the risk reward much more interesting at current levels itself. Second is a buy on Mahanagar Gas Limited. The stock gave a breakout about 900, 920 levels, went up to 1000 with a single day move and a 10x volume bump up. Did a retest of 920 day before and now has seen a reversal yesterday. That indicates we are setting up for the next leg of the move, which should take it towards ideally 1100 levels. A stop loss to be placed at 930.
Right, okay. All important day, all eyes on the MPC meet outcome. The street is now expecting the committee to raise rates by 25 basis points. Ankur Mishra is currently outside the RBI headquarters. Let me take it across to him and find out what his poll of bankers and economists is anticipating. And Ankur, it seems like it's going to be a 25 bips hike, but what about the commentary?
In a few minutes from now, Reserve Bank of India Governor Shaktikanta Das will detail the monetary policy, and the expectations are that there will be a hike of 25 basis point in the repo rate. There is also an expectation that this might be the terminal rate after 25 basis point hike. Now we need to wait and see whether or not there is some signal from RBI Governor on the same. Apart from that, liquidity is something which banks are watching out the indication is that the system liquidity is around 1 lakh crore. So we need to wait and see what steps the Reserve Bank of India takes for maintaining that surplus liquidity, because time and again it has been told by Reserve Bank of India that the liquidity will be maintained and there will be sufficient liquidity in the system. Apart from that, inflation forecast is something which all eyes will be there, because last time there was a revision of 6.5% forecast for FY 2023. Now we need to wait and see whether or not there is a tinkering of forecast, because last 2 months the CPI has remained higher and it is beyond the comfortable range of Reserve Bank of India, that is 6%. Also we need to wait and see what are the announcements which are outside monetary policy, which are made by Shaktikanta Das in the press conference which is set to begin soon.
All right, thanks very much, Ankur, for that. And we also spoke with our consulting editor, Maithili Bushnarmat, to find out what exactly her expectations are from Mint Street today.
Well, yes, this is the first meeting of the Monetary Policy Committee, the MPC, in the new fiscal. And unlike in the past, where it really had, I wouldn't call it straightforward, but it was basically a trade-off between growth and inflation. This time around, the MPC has to contend with the third element of financial stability. Because after what we've seen in the US, the consequence of sharp rise in interest rates and what it means for banks' portfolio, this is something the MPC cannot completely ignore. At the same time, the MPC's mandate is really about inflation control. So it's going to be a tough call. The RBI, of course, will always be cognizant of financial stability, but the MPC will have to look at it only indirectly. The broad market view seems to be that since inflation is still very high in India, the RBI and the MPC is likely to have a 25 basis point hike in interest rates, the repo rates. But what we saw from the last monetary policy meeting is that 2 of the 3 external members are already arguing in favor of a pause. So it is going to be a tough call. There is a case for a pause, particularly since the RBI's remit on monetary policy and inflation control is confined to essentially the core inflation. And that in the Indian context accounts for a small part of the consumer basket. So it's going to be a tough call. One could argue equally for a pause, particularly since growth is expected to slow down, as we've seen from the World Bank estimate of growth for India in this fiscal. So, but the market consensus seems to be a 25 basis point hike in repo rate. We'll have to wait and see what the RBI governor decides, because ultimately, despite the existence of an MPC, ultimately it is the governor's call.
It sure is. Let's move forward then and let's talk about the equity market construct. And Chris Wood of Jefferies is in his latest report saying that the valuation differential between India and China is at a traditional mean. What else is he saying about the India markets? Let me take it across to Pankaj and find out exactly that. Pankaj?
Thanks for that. If you just look at, really what Christopher Woods is saying in his quarterly note, which is known as Asia Maxima, he writes about various markets, what's the key trend, and what I am picking up is about what he has written about the Indian market. So the key thing that he's saying, what's happened in the previous quarter is that the valuation difference between India and China has returned at a traditional mean. Why has that happened is because since October 2022, China market or the Chinese market is up about 60% outperformance versus the Indian market. Plus, India market has underperformed, and that's taken the valuation back to its traditional means. Nifty's premium is high. It's high, but it's declined to about 105%. It used to be very, very high till about October 2022, and now it's completely changed or become to a normal mean. Now, the domestic story in India is justified as far as that premium is concerned. So that premium is justifying the domestic demand story as far as India goes. Also talking about the residential market, which they have been calling for, and the loan growth market. So loan growth market has slightly slowed, but is still at about 15% And when we just look at the residential market and the capex market, they now believe that recovery in the residential market is quite visible and it continues. And now they are talking about capex market and how things would move over there. All of the above, which means loan growth, domestic demand, as well as recovery in the residential, all point out that private sector capex is now due for an upswing, if not overdue, after a long sort of a stable move coming in on India private capex.
All right, thanks very much. That's the latest note coming in from Chris Wood talking about India. But let's also find out what some of the Q4 updates have been from individual companies. Nykaa in particular, first time ever, the company came out with those updates where they say they're seeing strong growth in the beauty and personal care segment. Fashion, though, they have acknowledged remains subdued. Sharad joins in with a detailed insight of the updates from Nykaa. Morning, Sharad.
Well, yes, in focus we are having Nykaa, and this is the first time actually the update is coming, especially on the revenue front as well. But overall, if we see, it has been mixed quarter. Now there is a BPC segment, which is the beauty personal care product. That segment has actually given a very strong performance, and also if you talk about the fashion segment, the fashion business segment, that has come under a subdued manner of growth. Now, of course, the management has stated in the press release that they are expecting the 9-month growth rate to actually reflect for FY23 as well. That means it's a 42% growth in the gross merchandise value and a 37% revenue growth expected. Now, that is something in the mid-30s. That is what has been estimated by the management. Apart from this, this vertical has actually experienced a strong growth, the BPC segment in the fourth quarter as well as the entire FY23. And do remember that the growth rates has been higher because of partly by the brand called Pink Love, where the sale had happened, and because of that, that aided the top line numbers going ahead. But do remember that the overall the consumer discretionary spending actually did impact the fashion business, and that is why they have stated that the estimated growth which they have factored in for the fourth quarter, that's expected to come in the late teens. Now, of course, the numbers if we see was almost 32% growth in the first 9 months of FY23. So that is over there. We are seeing a slashing of estimates of the returns coming in for the fashion segment as well. But overall, we see it's still a mixed quarter coming from Nykaa. But do remember, a lot of competition might be coming in, as Reliance Retail has also launched its online platform in the beauty space as well.
In fact, talking about that, Reliance Retail has indeed launched its beauty omni-retail platform called Tira. They've announced the launch of the Tira app and the website alongside the opening of its flagship store at the Geo World Drive in Mumbai's Bandra Kurla complex. In fact, my colleague Ashpera Patil filed this report earlier.
Well, the competition in the beauty space is getting tougher by the day. While earlier there was speculation of Reliance Retail acquiring the Sephora brand, with the launch of their very first and very own beauty retail brand Tira, this will be competing with the likes of Sephora, Shopper Stop Beauty, Nykaa, and also MAC Cosmetics and other key players in the space. Now, this store has some interactive factors for the consumers.
All right, thanks very much. Lots of interactive factors, and that's the latest launch at Geo World Drive of Tira. Moving on then, let's shift focus to Avenue Supermarts. My colleague Lisa is here to walk us through the provisional Q4 updates that the company has come out with. And Lisa, all in all, is it a bit disappointing with some parameters?
Well, yes, DMart has updated on their Q4 update, and the throughput, that was slightly disappointing. However, the store count, that was in line. The revenue for Q4 FY23 was up 20% on year-on-year basis, and it stood at 10,340 crore. However, on a sequential basis, it was down 8.6%. This compares to a 3-year CAGR of 18.6% growth on revenue basis. In Q4 FY, the company opened 18 new stores, and this was lower compared to 21 stores which was added in Q4 FY22, and the total tally now comes to around 324 stores. Well, the average revenue per store, that came in at only 2.3%, and this is at a 3-year CAGR of on year-on-year basis. And average revenue per square feet, that disappointed at 3%, which was down on 3-year CAGR basis, and it was down 2.6% on year-on-year basis. So, well, Avenue Supermart will be in focus today on the back of Q4 update numbers.
Right, we leave it at that, Lisa. In the meantime, TTK Healthcare, we were just flagging this off. The board is going to be meeting on April 20th to consider delisting from exchanges. Sharad is here with more details on what this would imply. Sharad?
Well, yes, across groups and industries, restructuring is the theme, and over here we are seeing TTK Healthcare, which will be in focus. The board is expected to meet on April 20th, where they will consider the voluntary delisting of the company from the bourses in both BSE as well as NSE. The stock itself is up 36% over the last 1 month and currently sitting at a market cap of 1700 crore rupees. But now let's look at what the shareholding pattern says, and of course 75% of almost stake in the company is still held by the promoters. sectors. But on the public front, let's look at who are the important investors, especially in the mutual fund side. We have almost 4 mutual funds having a stake of almost 1.7% stake, with of course the majority of them coming in the Axis Mutual Funds portfolio. Apart from this, FIs also do have stake in the company, but it's at a lesser rate, coming in at almost 2.31% rate. And an important name comes up is the Jupiter India Fund. Apart from this, the HNIs, if we talk about it, they also have a 4% stake, while the retail has roughly 12% stake in the company. Apart from this, there is one more fund house which is called the MCap India Fund, which is holding more than 2% stake.
Thanks very much. That's all the latest newsmakers in today's trade. But let's get down to talking about individual stocks then. And Nooresh, get in your take as to what the outlook is on Nykaa. They've come out with their, of course, operational updates. Yesterday, the stock rallied about 7%. Have you had a quick look at the charts?
So technically, if we look at the whole sector, which is the new age companies, they've all gone through a correction of 50 to 70%. But some of them have gone through a sideways consolidation of 6 to 12 months, and that is where the base formation has been clear. So we've seen a Policy Bazaar, PB Fintech do well, but Nykaa is still away from that. The recent lows in, say, January of this year was 120. Day before it was at 121 rupees. So the stock still has a lot of time before it starts making a base. So out here, one should wait it out. It is just a one-day move as of now. Once it starts making a base at, say, 120 to 160 range, then maybe we can start looking at it and let it spend weeks and months together. So it's too early to call a bottom here. I would still be a little conservative, wait for some more time, let it form a much bigger base. And even after making a base, it takes a long time. So we've seen a Zomato go nowhere, but it's forming a base at least. So out here, it is too early to call a bottom.
Right. Okay, Nishal Maheshwari as well joins in on the show right now. Nishal, hi, good morning. Let's pick it up from where our previous expert was talking about. The so-called new age tech companies, and Nykaa, really, the first time ever they've come out with a quarterly update, that coupled with the kind of stiff competition that Reliance Retail's platform Tira will also bring about. Wondering how is it that you're assessing Nykaa after the recent fall that the stock has seen?
Morning. Thank you for having me on the channel. So Nykaa, obviously, I think it is going to face some challenges because more or less everything is available on Amazon also. So it's going to be a tough challenge for Nykaa as we go ahead.
Right. The other surprise move, Nishal, also has been the TTK Healthcare delisting, right?
Yes. That's been quite a bit of a surprise, actually. They have a long history on the exchanges. Basically, the company was doing pretty well. So we are a bit, but I'm saying at the end of the day, basically, it's the management call, basically, whether they want to continue with the listing or not.
Nishchal, could you just talk about, the banking updates that have come in? You track the sector pretty closely. What is the sense that you get? Not talking about a HDFC or a IndusInd or any bank, but overall, what sense you get on deposit and loan growth and the commentary that's coming in?
So besides this, we have also talked to a lot of NBFCs, basically, besides the banking. I'm saying it's the secondary channel, basically, as far as banking is concerned. And the read through which we have seen from HDFC Bank, basically saying that that's a very strong growth still on as far as loan growth is concerned. It's there across the industry. So one is basically we are seeing across the industry loan growths. Secondly, we are not seeing much challenge on the front of the on the asset quality front across the board. So I'm saying one of the things we track is basically how many checks are bouncing for the NBFCs and the SFBs, and there the number has not gone up at all after as a percentage. Actually, it has fallen to the percentage to the loans. So asset quality is not coming as a challenge as yet. Yes, I think they have, most of them will be absorbing this cost increases, basically, given that the loan cost has gone up for most of the NBFCs as well as banks. So I'm saying NIMs are going to be under pressure, but I think that's pretty well discounted in the market.
Okay, that's the update coming in on some of those banking stocks. But let's hear it out from Hemang Jani then. He is looking at pharma stocks as a strong opportunity in the market.
I think having seen a big underperformance in terms of valuations, that sector should do better this year. And what we feel is that because the each company has its own dynamics in terms of growth, valuation, comfort, etc. We would be more comfortable with names like Sun Pharma and Dr. Reddy's, because that is where we've seen some stability and major negative surprises in terms of US FDA alerts, etc. So definitely these are the two names which are high conviction ideas within the pharma space for us.
Right. Nishchal, a lot of India strategists are calling out that Indian valuations are now fine after the recent underperformance, especially versus China, how things are looking in. How would you categorize the Indian market?
So yes, I agree with them basically that valuations have come off basically, and we are at around, if I look at 1,000 rupees of earning basically for FY24, Nifty I'm talking about, and so I think at 17,500, you are 17.5 times. I think long-term average is closer to this, so you are okay with that. But I think what is still the macros, that is the one question basically which I will still be bothered. What does Fed do basically in the current scenario about inflation? That doesn't seem to be coming off, and the drivers of that inflation still seem to be very sticky. Whether it is the unemployment rate or whether it is the wage hikes, they still continue to remain very strong. And I think today also we are going to have at least a 25 basis point increase by RBI. And the world over has to follow whatever Fed is doing. So I think that is the worry basically. And if you continue to have interest rate higher for longer, that is definitely going to slow down the growth. So now that 1,000 rupees earning, which I was mentioning earlier, that is the only thing basically which is going to, the question is whether it is going to get achieved or not. And that's why I'm saying basically wait for dips to enter the market. I'm more comfortable closer to less than 17,000 rather than actually trying and hurrying into the market now.
What's your outlook on L&T, given the fact that there has been some decent order wins just recently, as yesterday there was a 7,000 crore plus order win for L&T. Is it a standout performer within the space? Nishchal?
Yeah, definitely, basically, because I think if you really look at it within that sector, basically, if you are a large cap player, there is nothing beyond L&T actually. They have a large order book and the executions are pretty good. Though I think there are concerns as far as the return ratios are concerned. So there are concerns on that. But I think otherwise, it's a bellwether player out there as far as the industry is concerned. Because the second player is like one-tenth of them, basically. I think the second largest player is NCC, which is around 10,000 crore, and L&T is around 1,50,000 crore kind of turnover. So I'm saying there's a huge difference between the second player and the first, and I'm saying so L&T still continues to remain our favorite in that sector, and we have a buy at these prices also.
Kunal, let's start by, specific in terms of Reliance Industries, after a long time in the last 4-day move, if you would check out Reliance Industries, it's also participated quite a bit as far as this recent 3-4-day move is concerned. What's your call on Reliance Industries?
So yeah, Pankaj, I think forming a double bottom pattern at 2,200 levels, I think the stock entered or ended the series of March with a bit of a, I would say, disappointment. That the stock was getting into an underperforming zone. But the start of this April series, the last couple of days specifically, the stock has seen a very strong comeback from 2,200 to now 2,300 plus levels for the stock price. Even I think 2 or 3 days back, when the stock had shown some strong candlestick patterns, the volumes are very intriguing. So this is what we classically look out for, that if a stock forms a double bottom pattern, establishes a base, and if the comeback for the stock price happens on higher volumes, we establish that a trend has changed for the stock price, and we would expect the stock to get into a gradual uptrend and try and reverse the previous trend for itself. So to put that into context, I think Reliance Industries, which has been correcting from 2,700 levels to sub 2,200 mark, now seems to have formed a good base at current levels. So I think for traders who are looking to buy the stock, these are very attractive risk reward play. Even if it's a short term trading play, I think 2200 broadly could be kept as a closing based stop loss until till the time the stock trades above those levels. Traders can hold on to their long positions, and as well as for guys who are looking out for more positional plays, I think for them as well, the risk reward is very favorable entering into the stock at current levels.
Stay with us. Let's move right on then and focus in on some more news and updates. And in the Economic Times, we understand that the UK government has offered to revise the offer that had been made in January to Tata Steel UK, which has been seeking a financial package to execute their decarbonisation plans for the Port Talbot plant. Let's take it across then to my colleague Nehal Chaiwala from the Economic Times, who joins in with those updates. Nehal?
Hello, good morning.
Hi, morning. Take us through the updates.
Right. So we understand the UK government has offered to revise the financial package that it had offered Tata Steel in January. The offer made in January was lower than what Tata Steel was expecting. The company worked through the offer over the past 2-3 months, and they came to the conclusion that it would not make financial sense. And they are seeking better terms, and now we learn that the UK government has offered to reconsider its offer, the financial package that it was planning to give Tata Steel UK.
All right, fair enough. Thanks very much for giving us those details. That's the latest that we understand, that as of now, the Shapoorji Palanji Group is in talks to raise close to $1.75 billion, and actually that's that revised offer there for Tata Steel, according to those Economic Times reports. That's exactly what we're picking up, that the UK government has offered to revise that offer that Pankaj was made in the month of January to Tata Steel UK.
Right, so Tata Steel always in news, always in focus. Something or the other keeps coming in. They also declared their Q4 numbers, where you saw an India bit decline. Nooresh, any view on Tata Steel? 104 has really done nothing for a long while now.
So the stock has actually gone nowhere, and it's, for a period of time, it has not come up on any technical screens. Otherwise, the stock is generally volatile. So if you look at the last maybe a month or so, it's been around 105 only. So the volatility has also dropped. The only case is that the stock has been sideways for almost the last 8 to 10 months. So difficult to say that it will take another crack down. But it seems like it is trying to form a sideways consolidation for the last 1 year. So as of now, no views, but would start looking at it once it starts crossing 115. That would be an indication that a short-term bottom is in place and there could be some rally. As of now, totally sideways.
Right. Nishchal, how would you look at some of these metal names? You know, we all understand that prices of raw materials have gone up, and you know, the finished good prices are not so high as they used to be, but their balance sheet has become pretty strong.
Yeah, I agree. I agree to that, basically, because you are coming out of a very strong cycle. And but the issue still remains to be basically when you are talking about a possible recession in the US and Europe, though they are not as big a consumer as China and India, but still a significant portion, basically, if they are facing a recession or recession-like condition, basically, I think metals are going to be on sideways. So I'm saying the question is about growth. We have been negative on the sector for almost now 6 to 9 months, and we continue to remain negative. I don't see any. So there might be some few sectors within steel, basically, which might be doing better, like stainless steel. But otherwise, on a broad spectrum, I don't think so. We are going anywhere as far as metals is concerned.
All right, got the point, Nishchal. In terms of metal, stay away for now, despite the correction or the sideways move that one has seen. Nishchal, just in terms of mid-cap and small-cap, you know, we've seen a recovery in the larger names so far in the last 4-5 days. Do you expect mid-cap to play a catch-up, or once again, those growth concerns will keep mid-cap valuation more in check versus the larger ones?
So even the mid-cap, small-caps have also been pretty strong. I think most of the people who own that, or the funds who own that, basically, they must be doing bottom fishing, given that mid-caps have fallen, mid-cap and small-caps have fallen quite a lot. So that is there. But if you really look at it from the macro side, historically, a rising interest rate or a high interest rate has always been negative for mid caps and small caps, because the availability of capital basically starts getting squeezed out, and that's what is happening at the moment. Their cost, definitely, both on the terms of raw material as well as on the cost of capital, all will go up basically. So I'm saying there is going to be challenges. Again, on the demand front also, we see challenges. So I think you have to be very, very sure about what mid caps you are into and what kind of scenario and outlook that mid cap has. So can't be brushed with one, can't be painted with one brush actually.
Nooresh, any view on the Nifty Pharma Index? Slowly and steadily, is it trying to make a comeback?
So the problem is, if you look at the pharma index, it has not done much, but there are selective pockets which are trying to turn around. So the Nifty Pharma Index has gone nowhere in terms of relative performance. If we look at a little longer term time frame. So if you look at Nifty Pharma Index, it is still lower than where it was in 2018. The whole rally of 2021 has been taken out. We've gone from 15,000 to almost up 12,000. But what we are seeing is, we are seeing a comeback in some of the pharma names. So if you look at a Dr. Reddy, it hit a new 52-week high. That 4,600 mark has been crossed. So that is one that is taking leadership. Sun Pharma is not corrected, continues to be a leader, although not very strong momentum. But yes, it has been holding on really well. Then we are seeing some of the smaller names actually make constructive patterns. So something like Aurobindo Pharma, Glenmark Pharma have started coming up, and Alchem Labs have started making a breakout. Yesterday we saw some bit of a bump up in a company like Ajanta Pharma. So what we are seeing is, there's an indication that the trends could be changing for pharma. A lot of stocks which have fallen, something like a Laurus Lab, which has gone from 700 to 300, could see a 20% bounce. But there are structural trends shaping up. So one has to be stock specific rather than take the whole pharma index. But the two heavyweights in the pharma index, Dr. Reddy and Sun Pharma, have started taking leadership. So that looked promising, and one could go selective in the smaller basket as well.
Nishal, what do you do with IT? I mean, one was talking about KPIT Technologies at a 52-week high as of last week, and then, of course, that brokerage downgrade came in, and you saw that knee-jerk reaction in the stock. Yesterday, I was looking at the screen, Coforge, LTTS, all were holding out well. And from, of course, next week, you'll have the IT numbers as well trickle in. You think the worst is behind us for IT, or would you wait it out this quarter, see what the management commentaries are, and then perhaps take a call?
I would like to wait. Actually, I'm not very positive as far as IT is concerned, given that you have challenges as far as growth is concerned in the US and Europe, which are the large two consumers. If you see, most of the companies, 80 to 90% of businesses in these two geographies. And if both these geographies are going to face challenges of growth, I don't see how IT is going to do well. So I think we have been underweight IT. I think we should continue to remain underweight. Now, whatever we are seeing of yesterday, basically, there's mostly, I'm saying this is a trading bounce. People shift from one sector to other. One sector becomes cheaper than others. And that's a way, basically. And yeah, I agree with one thing is, basically, it's a good hiding place. Because obviously, very strong cash flows, good quality management, strong balance sheets. So yes, all those things are in favor, but growth is not there. And that's why I'm worried about it, basically. And I don't see there is going to be any positive commentary as far as this current quarter is concerned.
Okay, let's get in a quick view, Kunal, as to what the outlook is on some of those hotel stocks. You guys have been talking a little bit about Indian hotels. Yesterday, we spoke to the management of Lemon Tree Hotels as well, who said that things are going well, prices are on the rise. What's your outlook? Is there anything else within this space?
Well, yeah, I think the traditional stocks which you look out for is Indian hotels. Of course, that's a stock which gets a lot of eyeballs. The likes of Chalet, Lemon Tree, Oriental Hotels. These are a few other names, Taj GVK, etc. A few of the other names which have done reasonably well for themselves. In fact, in the last 1.5 or 2 years, from 2020 pandemic lows, many of these stocks have given returns of more than 4x to 5x as well. For example, the likes of Lemon Tree, it was, I think, a stock which was 20 rupees or 25 rupees odd. In 2020, and that stock had moved up into the 3-digit market. I think 100, 102 was the high for Lemon Tree in end of 2022. and from there the stock has now gone into a mild correction. So these stocks are going into a phase of a consolidation or a correction for themselves, and after such a kind of a steep rally in the last 2.5 odd years, it's bound to be that these stocks go into a time-wise phase of consolidation. But ideally, I think these should be taken as good entry points back again. So for example, Indian Hotels, we flagged off a strong buy call when the stock had hit that sub 300 mark. I think Chalet, Lemon Tree closer to I think 75, 78 where it's trading right now is showing signs of a strong demand as well as bottom formation process. So would be bullish on the hospitality space, specifically the hotels, and I think Indian Hotels as well as Chalet would remain to be the Lemon Tree would remain to be the top picks.
That's the take coming in on Lemon Tree, and we were just chatting with Mr. Keswani yesterday, and he said that if you think you paid a lot in the year gone by for room rates, well, brace yourselves because ARRs are only going to go higher in the next 2 years as well. But Nishal, would like to take the moment to thank you. Thank you so much for taking the time out and joining in today.
Thank you.
Let me also welcome on board then Sandeep Tandon and talk about what a mega success the mutual fund performance has been. Sandeep, hi, good morning. In the last 3 years, your equity AUMs, as I understand, have grown from 36 crore rupees all the way to 19,000 crore rupees. That's a 500 times jump. What would you say has contributed to the success?
So I think this all has been supported by the trust of lakhs of investors which we have invested. So we have more than 20 lakhs folios. So the trust of investor and distributor which they have showcased us in our processes, our risk management system which we have built, with the investment framework which we have built, which has led to this sort of AUM growth which we have seen. So I think it's all about processes which we are able to demonstrate, and we have earned this trust from in last 3 to 5 years.
Right. Sandeep, also just quickly, if you could tell us, for a performance which is better than others, different than others, you need to follow a different approach. So could you just tell us your approach in stocks picking, approach in asset allocation towards various sectors? What are the things that you look at before selecting a stock or a sector?
So Pankaj, the key thing which we always, let me start with the phrase we generally talk about, that we are in the business of risk management and returns are byproduct. Okay. So the entire thesis which we have built, our risk mitigation framework, which we generally call it PLRT framework, where we try to capture our global macros in the form of liquidity indicators or risk appetite over and above the valuation analytics which every traditional house has said. So when we look at the combination aspect, it gives us a better outperformance because it's all about what framework you have built. The way we look at, we all live in a very dynamic world. Data keeps on changing. We can't have a static style of money management. So we brought India's first dynamic style of money management. Okay? So as a mutual fund or as an AMC, we are not in that sense, but we say we are a data analytics firm. So entire thesis, Pankaj, revolves around data analytics, and that gives us some edge in terms of taking or generating superior risk-adjusted returns.
Got the point. Let's start with the markets, Sandeep. What do you make of the current market situation? We saw a correction last 3 days. We've seen some buying coming in. You think markets have made a bottom in the near term?
So, as I always talked about, that 2023 will be more volatile. And one has to live with these volatile cycles because the larger perspective of Indian macro looks very strong, both from medium-term and long-term perspective. Yes, we have seen good amount of capitulative moves in many of the stocks. Okay, in India, particularly in the mid-cap and in the small-cap space also. But even in the large-cap space, we have seen good amount of capitulation. The quant fear index was one of the highest post-COVID levels. So that's the level of fear which has been built. Even today, market participants are very reluctant to participate. Okay? And that has led to a small rebound which is expected. But I also like to give you some word of caution because though Indian macro, everything is good, but global risk appetite has declined. And this is one of the reasons we believe that the first half of 2023 might be challenging and volatile. When I say challenging, it's more volatile. So the sector rotation, stock rotation is the theme to play with that. Otherwise, first half can be slightly weak relative to the second half of 2023. But it is always, a lot of people believe that I can sell now, I can rebuild position again. That is theoretically is not possible. So if you really talk about the best way is that buy on dip strategy, India should work. we remain very constructive. And I think if any events unfold because of global situation, it should be used as a buying opportunity rather than worried about that something is unfolding. So constructive from the near term and medium term perspective also for India.
Sandeep, hi, morning. You had also spoken about a great alpha generating theme in the form of manufacturing. Does that thesis hold true for the long haul? And if you could be a little bit more specific as to how one can actually play or bet on that theme.
So, in terms of manufacturing, is a very large thesis because we are talking about the way some of the global macros or the global economies are getting affected. So that generates a huge opportunity in India. So because manufacturing itself is a very large theme as a concept, so we like to capitalize on the individual components. Obviously, by default, banking is the first component which becomes very important, both private sector and public sector. That's one important theme. Then if you look at the infra themes is also should do very well. This has been a big most neglected theme for last many years. The stocks opportunities are very limited. Yes, capital goods has moved up significantly and most of stocks are becoming relatively expensive. So I think it's an opportunity in the auto ancillaries, another opportunity one should look at. So capital goods, the large caps names have outperformed and they are expensive, but there are many such opportunities available in a small and mid cap if one to shut down and analyze. So auto ancillary, power, if I have to look at the infra in general, I think these are the larger themes, and this list is can be very large. So one has to spot the opportunity on individual names rather than saying one sector or one thesis which has played out.
Sandeep, one's wondering whether pharma can be that contrarian bet in the market. While sure enough, DRL and Sun Pharma what have done very well in the year gone by, but whether or not the gains can be more broad-based now in the pharma sector, which has been a bit of a lag in the year gone by.
So it's a interesting point which you have brought, because we have also seen now pharma sector is now trading in that neglected zone which we generally look forward. Okay, so we exited from September 2020 from pharma. We have been adding some of the pharma names. Okay, so it's not very decisive right now because in terms of earning potential, it might take a quarter or two more. But if I have to look from a behavior perspective, as we generally look forward, stocks are trading in the neglected zone for wine, or I'll say some of the stock has reached the most hated zone also. Okay, people don't want to even touch pharma names. Rather, majority of the fund houses are actually exiting because they have been holding for these names for a while. So their patience is getting tested. So I think it's a good opportunity, but one has to be very stock specific there, because it's not that we are able to take that call. The sector has reached a bottom and then one should be. I think bottom fishing should be done on some of the individual names, and particularly those names which has been in neglected or beaten down and something is or some trigger are expected. Those are the names which we are looking at.
Right. So pharma is something which you would look at, but it's a neglected sector, so opportunities could come in, but one has to be selective. That's what you're trying to say.
Yeah.
Right. In terms of selective, would you categorize healthcare also in the same category, the likes of Fortis and other hospitals?
See, hotels, hospitality space itself is very good post-COVID. This sector is recovering. So we are constructive on the hospital space, but only thing is that we have to look at the valuation. Some of the valuations still very, very stretched. Even some of the diagnostic companies, they have corrected a lot from the higher levels, but they are still not that attractive. So I will selectively, one can participate in the hospital space also, but I'm more constructive on the pharmaceutical, the formulation companies or the APIs company or the CAMS thing. So more focus on the pharma companies rather than the hospitality areas.
Sandeep, what's the outlook when it comes to the entire cement space? Because Ambuja is something that you had looked at a long time ago. Is there anything else, or what's the compelling argument within the cement space?
So if you really look at, if we are constructive on the infra, then cement by default become the first choice. So we are holding a very large exposure in some of these large cap companies, some of the mid cap companies also. So we are very constructive on the space. This quarter, in terms of volume growth, will be very good. May not be great in terms of margin, But if you look forward, let's say talk about next 1 or 2 quarters going from the, let's say, FY24, financial year 24, I think it should be more constructive because we expect even margin expansion because energy prices has corrected a lot, so which will help them. Demand is anyway picking up. The only concern which we have, that extraordinary capacity announcement which has made by all the players that they will go to increase their capacity by 30%, 50%, 80%. That is something which is slightly scary at this point in time. But one has to look at whether it really get implemented or this is just an announcement, because to implement this side, it takes time. So from a near-term and medium-term perspective, we are very constructive, but too mature to talk about very long-term thesis given the extraordinary capacity which is being talked about.
Right. Sandeep?
Hence, the patience of retail investor will be tested. But so far, we have not seen, and it matches with our thesis. If they have made extraordinary money in 2020, 21, they are more patient. Okay? Because this is not their core business. They have left this thing to the investor like or investment manager like us. So I'm very constructive from the retail flow perspective. I have not seen any slowdown neither at our end nor at the industry level. So I think this phenomena has potential to last for long. So, and it fits with our larger thesis for India as a to be $10 trillion economy in 10 years' time. So I think I personally don't expect the retail flow will slow down. And so far, there is no trend to endorse that.
Sandeep, always have, a pleasure having you on the show today. Thank you so much for taking the time out.
Yeah, thanks a lot.
Okay, that's the word coming in from Sandeep Tandon on the markets and, of course, the overall performance of their fund. Couple of stocks that we need to highlight in the pre-open rate. Let's see what the rate on TTK Healthcare is, considering the board is going to be meeting on April 20th to consider delisting. Let's see what the reaction in the stock is, 18% higher on TTK Healthcare. Nykaa as well, they've come out with the Q4 update, the first ever, and the fashion business clearly saw the impact of less consumer spends in the fourth quarter. That's really been the key takeaway, although the stock is holding up 3% higher as we speak right now. Chola Investments, the dispersals have come in higher by a solid over 65% for Jeevan Small Finance Bank as well. AUMs are higher by nearly about 33%. Equitas deposits uptake of nearly about 34% on a year-on-year basis. And the disbursements as well have risen by almost about 80.5% on a year-on-year basis. Hero MotoCorp as well, that's going to be another important stock. They've launched a VRS scheme or voluntary retirement scheme for their staff. So look out for that as well. And the Tata Steel numbers for the fourth quarter have come in. The Q4 production volumes have come in higher by a smidge over 5%, and the delivery volumes are higher by about 0.6% on a year-on-year basis. For the overall market, though, it seems like we're headed in for a quiet start, going by what the benchmarks are up to. But of course, yesterday, while the benchmarks did what they did and managed to close in at the session highs, the mid-caps did not. They were the ones which were lagging and underperforming. Having said that, Kunal and Nooresh have been spotting some trading opportunities within broader markets. So let's get to their mid-cap ideas. Nooresh, what's on your list?
So that would be a buy on Ahluwalia contracts. We've seen the whole infrastructure space, road infra, do really well. Now, Ahluwalia contracts had multiple tops around 530 levels. 2 days back, it went up to 580. We've seen a fade off in the last couple of sessions, which gives us a good entry point of a retest. So at 520 to 540, it becomes a risk reward buy and a good entry point near the breakout. It's a classical cup and handle breakout, which has a target price of at least 650 plus. So a buy at current levels with a stop loss at 500.
Okay, let's get in your recommendation, Kunal, your mid-cap pick.
Well, it's about Anantraj Industries, a stock which I've been bullish on earlier. I think the targets which I had placed earlier was closer to 130, 132. The stock seems to have crossed those levels quite convincingly yesterday. So would up the targets for Anantraj. Traders could look at a fresh buy. 140 as a fresh target. Stop us at 126.
Right, Q4 updates are coming in thick and fast. One such company declared numbers was Chola Finance. Vamakshi has been scanning through the numbers. Vamakshi's strong disbursement growth, what was it led by?
Well, it's a very strong update that has come in from Chola Investment when we're looking at the disbursements, especially. Disbursements for the quarter stood at around 21,000 crores, which is an uptick of 65% on a year-on-year basis. But more importantly, it is an uptick of nearly 20% on a quarter-on-quarter basis. Now, for the entire year, disbursements stood at 66,532 crores, which is an uptick of 87% on a year-on-year basis. So definitely, we're seeing that the momentum in disbursement is surprising positively. Apart from that, the new businesses that have come in with the likes of MSME, CSEL, SPPL, they contributed nearly 22% of the disbursements this time around. When we look at the business-wide disbursement growth as well, we're seeing that vehicle finance saw a healthy growth of nearly 39% on a year-on-year basis to 12,190 crores. Now, the highest growth among all businesses came in the home loan portfolio with an uptick of nearly 156% on a year-on-year basis, and this was followed by MSME, which grew by nearly 127%. The collection efficiency was another factor that stood out for the company. The company reported an overall collection efficiency of nearly 130% in the fourth quarter, and this is suggesting an improvement in the stage 2 as well as 3 pool. Liquidity was also remaining quite strong for the company with a cash balance of 5,200 odd crores as at the end of March 2023. So overall, when we're looking at the update that has come in from Chola, it looks like a very strong update in terms of the disbursement as well as the collection efficiency.
Okay, thanks very much, Vamakshi, for those details. Let's